$2.5 million. In this video here today, we're going to talk about the public count. We're going to talk about Meta stock, Tesla, PayPal, Palantir, SoFi, Celsius, my Toll Brother puts, all those sorts of things in this video, very in-depth. Going to give my updated thoughts and opinions on these stocks. Obviously, a lot of them have moved immensely recently, so do I still feel as bullish on them? Do I feel like I'm going to sell some? We're going to talk about some major moves I'm going to be making in this portfolio very soon, so we'll get on all that in this video here today, folks. That would be an interesting time to do this video as well because we have a NASDAQ that's at all-time highs right now. Meanwhile, you have a Russell 2000 and small cap stocks that are basically at their same level they were 4 years ago. 4 years ago, which is absolutely a fascinating time in the market. So I thought this would be a great time to talk about some of the moves I'm making here and kind of my feelings on a lot of these different stocks that have made big moves, right? Now, in terms of the public account, I started this account around 7 years ago, roughly. Every move has been able to be seen every single week by my private stock group members. So every time I go to sell a stock, buy a stock, it's always been able to be seen. And I created this account so people could see exactly how to build up a portfolio from scratch. And obviously, now it's gotten to very unrealistic numbers for a lot of folks. It's gotten big, right? And I'm sure someday this portfolio is going to be $10 million plus. But it was started at very humble beginnings with only a few $1,000s back in the day, and then we just kept building and building and building, and obviously, it's at the numbers it is today, right? Patreon portfolio today, I started that at the beginning of last year. That portfolio is now $20-something thousand. So that's still like realistic ranges, but I'm sure someday the Patreon portfolio will be at such big numbers it'll be unrelatable as well, right? Now, as far as the portfolio year to date, 30%. So we're definitely beating the S&P 500 immensely here, calculated by Fidelity Investments. On a 1 year, smashing the S&P 500 as well, and on a 5 year, absolutely decimating the S&P 500. I can't wait till we get 10-year returns on the public count. It's going to be extraordinary when it comes to that. Okay, guys, appreciate you joining me as always. All I need from you, smash a like, make sure you're subscribed here to the channel, and additionally, some housekeeping is if you belong to 1000xstocks.com and you've never got your steel card, let Trevor or let Andre know you've never gotten it before, and we can certainly send that over, your steel baby here, okay? This guy. So yeah, if you've never received that, definitely let us know. Additionally, if you're in my private stock group and you've never gotten your steel card in the mail, let Trevor, let Andre know. We can easily send those over. And if anybody's been hitting 6 figures or 7 figures in your portfolio recently, make sure you go down the applications tab in the private stock group there in the Discord chat and apply for those awards. We send these complimentary. You don't have to pay for shipping and handling. You don't have to pay for the product, none of that. We send those babies out to your house, the 7-figure club and the 6-figure club. This was just this past week. We had 2 private stock group members get to $1 million plus in their portfolio, and then we had 5 private stock group members get to over $100,000 in their portfolio. So yeah, if you want to receive those and you hit those milestones, then go ahead and make sure you fill in for that. Okay. Alrighty, guys. So let's go through the portfolio. Let's talk about each of these stocks. There it is. There it is. There's a full portfolio of the public account here. Okay, so let's start going through these one by one, and then we'll talk about some major moves I have coming here. Meta stock, it has performed tremendous for us. It is now over $1 million, which is, I believe, the first time I've ever had one stock in one portfolio over $1 million. I don't ever remember that happening in the past in terms of just one portfolio being over $1 million. I've had $1 million in probably a few different stocks over time, but it was like divided up between different portfolios. In terms of one portfolio, $1 million, that's a new banger there, okay? So when it comes to Meta, here's the deal. I'm still feeling tremendous in regards to Meta. And the reason being is a forward P, the 2-year forward P, look at these, and I mean, we're right in kind of market multiple ranges. But the difference is with Meta, they're going to grow exponentially more than an average stock in the stock market. So this is why I still feel very good about Meta stock here at 589. Now, my thought is if they come through with banger earnings and a banger guidance here for Meta, I think we could be looking at a situation where Meta approaches 700 before year end. And that's my hope. I really want Meta to get to around $700 before year end because I actually want to sell a little bit of my shares. Not a lot, a little bit. And the reason being is I'm looking to put a little money in some additional stocks, which we'll get into in just a moment here. So I thought Meta could kind of be a great place to kind of fund from, but I really don't want to cash out any shares really under 700, so I'm kind of waiting on that. And when it comes to selling some Meta shares, let's say at 700, cashing out a little bit of those, you got to understand it's not really about, oh, I'm afraid Meta's going to go down, because no, like I still think Meta's going to $1,000 to $1,200 over the next few years, right? But what it really comes down to in regards to Meta is I just think, especially if I can get 700 and I cash out a little bit of those shares, I think there is some better ROI opportunities out there than Meta. Meta is a very good ROI opportunity still. Like, I think that stock could honestly double over the next probably 3 years, but there's some other stocks I think actually have the ability to triple, quadruple, 5x, 10x, if not more than that over the next few years. And so I need to probably position a little bit into some of those, okay? Tesla, my Tesla. So this is an interesting one because I was selling this stock going into the robo-taxi event, right? And I was cashing out, some of those shares in regards to Tesla. Now, I feel a little bit different about Tesla now after seeing the robo-taxi event. Actually, now I don't want to cash any more shares. Originally, because I have about 1,300 shares in the public account here. And so originally, my plan was to get down to around 1,000 shares of Tesla. But now I don't want to do that. And I actually want to hold the 1,300 shares I have. And here's why. I'm looking at their delivery and their production numbers, and they have started trending back in the right direction again, which I am definitely very happy with, okay? Additionally, now that I've seen what they have coming, which is exactly what I wanted them to have as far as kind of their future here, I see a future that's very bright in regards to the robo-taxi opportunity. Now, I do not like that Waymo has vehicles in the market in several different markets today that you can get in with no driver inside. I do not like that because Tesla does not have that right now. I don't like that. But what I'll say here is it does not mean Tesla has lost this war. And the reason being is the way Tesla is doing their technology here. If they pull this off, which to bet against Elon Musk and this team is you don't want to bet against these guys. There's the same brain trust of individuals that are landing rockets in the middle of the ocean, okay? So I'm just telling you, like Elon Musk and his teams, their engineers, these folks are built different. They do things that you never thought were possible, right? And so I think there's a real potential that Tesla's technology, when it comes to robo-taxis, could end up being just as good, if not better, than Waymo. But the difference is going to be, it's not about being necessarily better than Waymo or not. The key is that it's just as good as Waymo's technology today, right? But it doesn't have to use all the LiDAR and the different technology there. Because if Tesla pulls this off through just their camera technology alone and the AI, we're going to be in a situation here where Tesla's cost advantage is going to be immense versus the competition. Because those LiDAR vehicles they produce are very, very expensive. Now, if Tesla's able to pull this off with, this robo-taxi cars that are, let's say, are $30,000 out the door less, but probably cost for Teslas maybe $12,000, $15,000, $20,000. Oh my gosh! Then Tesla has the biggest cost advantage. They win. They beat everybody because because at the end of the day, this will be more of a commoditized business. So if company A, if you go to book a ride and you have an option of, taking an Uber through Waymo, whatever, right? Or taking a Tesla, and the cost is significantly cheaper for the Tesla, you're going to take the Tesla. Like, everybody's going to take the Tesla, right? I don't want to say everybody, but the far majority of individuals will take the Tesla in the end. And then Tesla wins the war, and they get 70, 80, 90% market share, right? We're talking market share of Google's type, search market type market share. Like, we're talking Meta in regards to their social networking type market share, like epic numbers. So I walked away feeling better about the short term with Tesla, given the production and delivery numbers recently, and additionally felt better about the long term with the robo-taxi opportunity there. Now, robots, Optimus, all those sorts of things, like, cool, maybe 5-10 years from now, that might be realistic technology, but I'm not baking that into any of my numbers here. And the one other thing that gets forgotten with Tesla that I do think is a very bullish thing to be, very excited about in regards to Tesla is the energy opportunity. That energy business is growing immensely. It's unbelievable. So thinking about the way the energy business is growing with the car business getting back on the right track, and then the more 3, 4, 5 year opportunity of robo-taxi right there, right? Additionally, The supercharging network opportunity with the services side of the business is going to, that business is going to go insane over this next 5-10 years, especially as there's more and more Teslas on the road and more EVs in general, because we know all these EV companies are pretty much all partnering with Tesla to use their supercharging network, right? Which just leads into one of many potential relationships there. So the moral of the story is, in regards to Tesla, I'm feeling better about the short term, and I'm feeling better about the long term since I got to see the production numbers, and I've gotten to see this event now at this point in time. So, and additionally, Tesla's they're really the only auto manufacturer out there that's a big auto manufacturer that has a great balance sheet. And I don't think that gets talked about enough. Have you guys seen how bad the balance sheets are in the automobile industry? Oh my gosh. Are they in for a rude awakening if their businesses turn any more significantly south, right? I mean, these guys do not have great balance sheets. And we've been in a great auto market for sales for a while, but that's obviously changed over the past year or so, I would say, right? And it's starting to really be reflected in a lot of these big auto manufacturer numbers. But when you think about Tesla's balance sheet and the cash position this company has versus the other guys are not in a position to really invest in their business the way they need to invest in their business. Given that we're in the two major fundamental changes in regards to the automobile industry. We're going EV, and we're going where the car drives you, not you drive the car. Those are two fundamental, insane shifts all going on at the same exact time, right? And these other auto manufacturers are not really in the position to really like fight Tesla the way they need to fight Tesla in the end, right? And, obviously I've been kind of getting more into the supercar stuff recently, right? I bought a Ferrari and really just talked to so many people that are really enthusiasts in regards to the supercar community. And it's fascinating for me to see, even these supercar companies, they would never admit it, but it's fascinating for me to see how much these guys are influenced by Tesla. Because you look at all the traditional auto manufacturers, they're all influenced by Tesla. They're all trying to shift their businesses to EV, or trying to, copy Tesla and do this and do that, right? But even these supercar manufacturers, I look at what Ferrari's done. I'm looking at what Lamborghini's doing. They're even being influenced by Tesla. They would never admit it. But you look at these cars in terms of everything's trying to go digital now. And a lot of the supercar enthusiasts are not happy about all these buttons going digital, right? Instead of all these manual buttons you used to have, it's all going into one screen. The front of your display is now all digital, right? This is all stuff that's being directly influenced by Tesla. Tesla's been doing this for years and years and years, and all these other guys are moving that way, right? Additionally, you're looking at these supercar companies that are now trying to put electric motors additionally into their cars and also have the internal combustion engine in there as well, right? So now they're trying to slowly go EV as well, which a lot of the people don't like. And so I'm looking and I'm like, even these supercar companies are being influenced by Tesla. Never mind the masses. Tesla's by far the most influential company in the auto space by a mile, right? And I think that shows you're doing something special. If you can be influencing the top guys, the ones that are selling the $300,000 and $400,000 cars, and the guys that are selling the $30,000 and $40,000 cars, you're pretty dang influential when it comes to that, right? And so Tesla, I gotta say, I'm feeling much better about Tesla, much better. PayPal. So PayPal, yeah, the stock's going up a lot, right? We're already up 28% now on this position, up $55,000. But here's the deal in regards to PayPal. Listen, this stock is still a phenomenal opportunity when it comes to this company. It's a phenomenal opportunity, right? If we go ahead and we pull up charts here for PayPal, we're going to see exactly what you want to see. You want to pull up a trailing 12 month of PayPal, right? Because that's going to give you a better gist of really what's going on in regards to this company, right? Trailing 12 month is up and it's up and it's up and up and up and up and up and up for this company. It's going to continue to go up, right? When it comes to trailing 12 month revenue, that's what you want to see in regards to a company like this. Like we go back here, $22.8 billion right around here, right? Q1 there. And now Q2 here, we're at $31 billion plus run rate. And so my opinion is PayPal continues to grow at a high single digit or low double digit revenue growth rate for years and years to go in the future. But meanwhile, we're going to start seeing that net income really start to fly. We're going to see major share buybacks, which is going to help the earnings per share immensely for this company. So when I look at PayPal, I love what I see in regards to this company. And the fact that it's trading at under a market multiple, Under market multiple on PayPal? Oh my gosh, like you got to be kidding me. Like look at this, we're at 18 forward P. The market in general, many of these stocks are trading 18 and 26. So, and we're going to get way better growth with PayPal. So I'm feeling great about this one. Alex, Chris is running this show on a phenomenal level. Oh, do I feel great. Palantir. Now, you want to talk about controversy. Okay, we're talking one of the most controversial stocks in the entire stock market in regards to Palantir here, right? Now we're up $192,000 on the stock, up 392%. Man, have we made some money in regards to Palantir. Now, meanwhile, you have a lot of folks that feel like this is just the beginning of the Palantir story, right? So this is where it gets very controversial. The stock trades insanely rich. It's no question. Look at the forward P. It's 117. We just looked at PayPal. It was 18, right? We looked at Meta and what was it, 26? Something like that. 2-year forward P, 104. We'll see if that plays out here, right? But something you got to go to is like the valuation tool here on 1000X, right? And you'll see based upon how you expect growth to come in changes this story immensely, right? If you just run 20% across the board on Palantir, right? 20%, which by the way is good growth rate for companies. Like there's nothing to be ashamed of if you're growing 20%. And they're kind of more in the SaaS space. So 20% grower, you're probably going to trade probably a 50 on the low side P ratio wise, right? Because this is like the holy grail business models. Probably a 50 to 70. If you're growing at a 20% clip a year, you'll trade somewhere in there roughly. Now, you see, is dead money. Is dead money for years to go in the future, right? No doubt. If this company's only growing 20% top line, 20% bottom line, this stock will be dead money for several years. But we could be going through a major shift in Palantir's business model, being that they brought down sales cycles so big, which is so massive for this company's future growth rates, right? That's a major change that's really just happened in the past year or two. And additionally, AIP, this company's now really seen at the forefront of AI technology and actually be able to use your company data in an intelligent way, in an actual AI-related way, right? We could be talking about a company that's going to grow much more rapidly than that. So let's say we got a company here that's going to grow 35%. By the way, I love being able to do all these valuations so quickly now on 1000X and be able to, run different ratios and things like that. Whoops, I went a little crazy there. Okay, we're doing 50% EPS because you're talking about 35% revenue growth there, right? So if you run those numbers now, if you're growing 35% top line, 50% bottom line, you're commanding easily 100 PE to 100 and let's call it 100 to, I would say probably 150, just to be quite frank with you. You might say, oh, why doesn't it trade around where the market trades? Why would it? If you're growing 35% top line, 50% bottom line, and you're put into the SaaS category, you're not even going to trade. It's not even going to, it's like a night and day difference, right? Because people are like, the company just has so much immense growth in such a sticky business model, like you're going to pay way bigger premiums than an average stock. So if all of a sudden you run some of those metrics, Palantir still looks like a steal deal today. And this is where all begins to start to come back to what is the revenue growth going ahead for Palantir. If it's 20%, I could tell you, if Palantir only grows 20% a year for the next several years, Palantir is going to be dead money for years. If Palantir grows revenue at a 30, 35, 40% clip per year over the next number of years, Palantir's got a long way to run here over the next few years. And there will be so much money to be made in this stock. It's going to be ridiculous. Absolutely ridiculous. So, that's what's very intriguing about Palantir. It looks like it is such a ripoff here. And then you start running some numbers and you're like, gosh, if they can hit these sort of growth rates, and is it crazy to imagine like they get up to a 30% plus revenue growth rate? It's not really. They keep accelerating the growth rate. The latest quarter was 27%. So to think they couldn't get to 30%, they might be able to. And then if we talk about they go 35%, 37%, 40%, you have to value this company completely different. So, and you talk about the leverage on the bottom line for Palantir. Oh my gosh, it's insane. So, the moral of the story in regards to Palantir, very controversial stock. It's not one I can sell. I can't do it. And by the way, they got the most pristine balance sheet out there, and they have. Does anybody ever even talk about their workforce other than me? They got one of the most incredible workforces you're going to find out there, right? I've heard from so many different folks that you can get hired at many of the Mag 7 companies before you get hired at Palantir. It's a whole different level there. So yeah, Palantir, can't sell it. If it goes back down to 30 bucks, I don't care. Oh well, cool. If it goes down to 25 bucks, cool. If it goes down to 20 bucks, which is probably not happening, but if it was, everybody'd have an insane buying opportunity. So yeah, and I produced a video in regards to Palantir back in May. It was called, this one Palantir was around $20 a share. And it was, buy Palantir stock and don't stop. And I think a lot of people are realizing, like, man, Palantir at 20 earlier this year was just a gift. And remember, the stock started the year under 20. What a gift that was. Amazing's on Amazon. So now we're up 69% on this one, up $85,000. In regards to Amazon here, okay, this stock, listen, this stock is a buy. It's a buy today. I wouldn't mind buying some more shares today. Am I going to personally go buy more Amazon shares in the public account? The answer to that is probably not. And the main reason being is there's just a lot of other opportunities for me to add. And Amazon's already a pretty darn big position for me. I have a position that I like. It's over $200,000. But honestly, if I had $1 million in Amazon, would I really want to sell it? I wouldn't. Like this company's trading very undervalued right now. When you look at the forward P, the 2-year forward P, let's have some fun here. Let's run some numbers on Amazon, and you'll begin to understand why this company actually is undervalued today. So Amazon, I think it's fair to assume this company will grow at 12% top line on average per year over the next number of years, which puts them in 2028 at over $1 trillion of revenue, which will be the first company to ever do that. Now, the bottom line should go up much more rapidly than that. I would say about a 16% number is not like a crazy number at all. Now, Amazon's usually going to trade between a 30 and a 50 P ratio, somewhere in there, right? And with those sorts of growth rates and how sticky their business model is, you got to understand, like, once you get into AWS ecosystem, you're not leaving AWS. Additionally, once you get used to shopping on Amazon, the e-commerce site, you're not going to stop shopping like that. Like, of course, that's going to be the way it is, right? And so you look at this company, and it still is an undervalued asset. And this puts them at only 9% net income margins. I think they're going to get way above that. And so even at these sorts of kind of very sleepy numbers, is going to be immense growth ahead. But I think they could probably grow 20% on average, bottom line, pretty darn easily over the coming years, which then gets them to a net income margin around 10% come 2028, which I think in 2028, they'll be double digits. It's a big question to me if they're going to be like 10%, 11%, or 12% net income margins come 2028. So in this sort of scenario, compound annual growth rate on the low end of 11%, high end of 27%. And those are not hard numbers to imagine there with Amazon. So Amazon's still a buy today. Elf on a shelf, oh man, okay. Another very controversial stock, made an insane move to the upside. Then the stock crashed, right? Obviously, we're doing tremendous on it. We're up 1,407%. And could I see a day when I'm up 3,000 or 5,000% on ELF? I could see a day where that's a potential, right? Now, in regards to ELF, here's the deal. 33 forward P, that's too low for ELF. Way too low. Why is it way too low? The revenue growth is way too strong with this company. Additionally, this company's not even focused on profits right now. All ELF is really focused on right now is revenue and market share. Revenue and market share. And really, honestly, all they're really focused on is market share. They want to grab every single human that wears skincare products, cosmetics products. They want to grab every single one of them, right? And sell to those folks. And so they really only care about market share, and they keep taking market share year after year after year. Terrain's doing a phenomenal job running the company. There will be a day in the future when ELF is much more focused on profitability, when they're much more focused on earnings per share. That's not today. So whenever that day does come, just understand ELF has so much room to move that earnings per share up. And my guess is they get more focused on earnings per share probably 2027 and beyond. And so ELF has a long runway ahead. They still have this market share game they're going to be playing over the next few years. And then after that, you're going to have a multi-year cycle of earnings per share climbing substantially. Oh my gosh. And so ELF, I think whoever's been selling ELF for the last number of months is going to look back in a few years and regret that in a substantial way. No different than I regret every share I ever sold of ELF back in the day. I regret it. Cheesecake Factory now up over almost 14% on the stock, up nearly $10,000, and that does not include dividend money in regards to cake. Cake, oh, it's such cake, man. It's such cake. It's such easy money in regards to stock. 11 forward P on this baby, you got to be flipping my flapjacks. Come on. And you got to understand, like, Cake has major brands. They're going to be expanding all across the United States. North Italia comes to mind, and Flower Child comes to mind, right? And that's going to be in every pretty much major city you're in out there over the next decade. And then Blanco, their Mexican concept behind that, has huge potential as well. I mean, jeez, there's just so much opportunity in regards to Cake. It's trading way too cheap. We're going into a lower interest rate environment, which means Cake can take on debt and get access to capital easier, right? Because at the end of the day, like, Cake's already seen as a preferred company. Like, you've already seen this company go through recessions, inflation. You've seen them go through everything. You saw them go through the shutdown. So naturally, Cake's going to be able to get debt at much cheaper levels than, I say, just about any other restaurant chain out there. But now that you're going into a lower interest rate environment, that bodes even better for Cake, because that essentially means they can expand even more locations, even more rapid over this next 5-10 years. Now, they can only go so fast because they got to keep quality high, and so you got to have the right management team in place, and you got to obviously have the right workers and those sorts of things. But Cake's just a phenomenal opportunity. You know, when you run numbers on Cake, you can see how much upside's really ahead in regards to the stock. So Cake, I have them doing at least 9% revenue growth on average 2025 through 2028. And I think they'll be able to outstrip on the bottom line a faster clip than that, so around 11%. Now, a 20 to 30 PE, I think, on this company is very fair, given that they're going to grow likely high single-digit revenue or in low double-digit net income there, right? So I think a 20 to 30 is very fair for this company. And look at what we have here. Look at this. We're talking about 23% compound annual growth rate between now and 2028, 36% on the high end, at a 20 to 30 PE, which is extremely fair for this company given those sorts of growth rates I think they're going to put up here. So the moral of the story regarding Cake is I think it's looking pretty dang good. I think it's looking really dang good. And so I love this stock. I love this stock. Give me every share in sight. Nike. You know, I don't have a lot to say about Nike because I've talked about it so much recently, including, I believe, on, what was it, 3 stocks I'm buying or 4 stocks I'm buying October edition, right? Or is it 5 stocks I'm buying October edition? If you guys watch that video, I believe Nike was one of the stocks featured. It's just easy money. Like, I don't even, it's one of those stocks that's such easy money, I don't even really want to talk about it because it's just like it's Nike, man. Like, it's not even like a question. Revolve. So Revolve's, now that one's a more hidden company that not a lot of people are aware of in regards to Revolve here. And they sell, I would say, higher end clothing. Like the average spend per customer per checkout is usually close to $300 or around $300 for this company, right? But this company, it looks like it doesn't trade that cheap. But here's the deal. We've gone through I would say a very negative time for their earnings per share recently. So what you're going to likely see play out over this next, I'd say 2 to 3 years, is a rapid recovery in the earnings per share. That's probably much more dramatic than analysts are expecting here. Additionally, revenue is going to start coming back very nicely for this company as well. Now that the consumer is going to be in a much better spot over the next 1 to 2 years than certainly they've been over the last 1 to 2 years, getting hit by inflation so hard, right? Real wages should be in a really good spot, which should bode very well for Revolve. So I love the balance sheet on this company. It's a pristine balance sheet. I love the management team. They've gotten this company through a lot of hard times. And I think it actually sets up very, very well. So Revolve is one of those stocks I own that I don't talk about that much, but it's actually a really dang good company. And I think it has a fun next few years ahead. Up 98% on the stock so far, up $33,000. The Planet, like, oh my gosh, I don't think people understand what's going on with the Planet. Like, oh my gosh, like the Vegas opportunity alone with the Vegas Superstore is phenomenal. The Orange County store is finally, they've said recently on conference calls that one's finally getting to around break even, which is a huge step in the right direction. And then you have the Florida opportunity, which is massive. Now, keep in mind, obviously there's some disruption in Florida because obviously the recent events, but like that stuff goes away and then you're back and whatnot, right? And so that Florida opportunity in 2025 is, people are going to be shocked by how big that is for this company. And so the setup here, the wholesale business, there's a lot to be excited about Planet. Obviously, it's a risky stock. It's a stock that's less than $1 a share. those stocks are generally risky, but this is one of the very few companies you're going to find for less than $1 that actually has like major revenues and major fundamentals that I think are going to trend in an epic direction in the right. Wait to see their next quarter numbers. Wait to see the 2025 numbers. I think a lot of people are going to have their flapjacks flipped in regards to that one. So I remain very bullish on the planet. SoFi. So SoFi, frustrating me a little bit. It's going up a little too fast. Okay. Here's the deal. I got $33,000 invested in SoFi. We're up about 27% on the stock already, up $7,000. Now, I don't like how SoFi is going up so dang quickly. Oh, no, I do not. So when it comes to SoFi here, company trades too cheap, in my opinion, on a 2-year forward P basis. Like way too cheap. Way too cheap. You got to understand, in regards to SoFi, we're talking about a company here that is kind of like Elf, that they don't really care about profits that much. Like, they want to make money, sure. They want to be at a place where they're not burning money, right? I think that's where Anthony Noto wants his company. But I do not believe Anthony Noto really cares that much about the amount of money they make right now. Anthony Noto is very focused on market share. He wants to become a big dog bank. How do you become a big dog bank? You steal market share. You take market share. You grab the new generations before they get a chance to bank with JP Morgan, before they get a chance to bank with Bank of America, Wells Fargo, Citibank, whoever the other guys are. You grab the younger generation and have them used to banking with SoFi, and they stay with you likely for years or decades or a lifetime to go in the future, right? And so that's what he's really focused on right now. So I think SoFi, if we're talking 10 years from now, the earnings per share, we're going to look back at the numbers in 2024 and be like, that was literally nothing. Like literally nothing. And so don't get caught up in the earnings per share game yet for this stock. It's a market share story. It's a customer acquisition story right now, okay? EL stock, this is one I've really liked here recently. So far up about 7% on the stock, up $1,800. Obviously, big play on Asia coming back here. They own some phenomenal brands. Business has been in a tough spot the last couple of years. I think they come back strong from 2025 and beyond. My only fear is that they steal away Elf CEO, which would hurt Elf, but it would definitely gain in regards to Estee Lauder. So you can say it's a little bit of a hedged here just in case. So we'll see what happens in regards to that one. If the stock went up a ton short term, I might sell the stock. Like if it went up and next thing you know, I'm up 30, 40% on the stock, and let's say they announced a new CEO, but let's say that CEO was not Tarang from Elf, maybe I cash my shares on EL and put that money somewhere else. I don't know. We'll see. But for now, I don't mind holding that for the long term. Fubo has a lot of things going in the right direction. I talked about Fubo. What video did I talk about Fubo recently on? Oh, I know what video I talked about it on. It was one of the 3 stocks featured in my recent video about 3 stocks with high potential. So I did a video maybe 3 or 4 days ago called 3 stocks with high potential. Fubo was one of the companies. I discussed one of those 3 companies in that video. So if you want to check out more in-depth thoughts about Fubo, watch that video there. I spoke about it immensely. Now, Celsius, we're up only 2% on the stock so far. This is one I want to build a lot bigger. If we're talking about big moves, we're talking Celsius. I want to build Celsius into a big position here, a big position. We go to valuation in regards to Celsius here, okay? And you'll begin to understand why I'm so excited about this particular company, okay? So Celsius, I think it's safe to assume they're going to grow 15% a year on average. That might be a way low number. They might be much closer to 25%. But I want to run them at a 15% number. And I'm going to say they can't get any leverage on the bottom line. No real operating leverage, so they just do 15% a year in net income growth as well, which puts them at net income margins at 13%. Now, a drink company, 15 and 15, you're going to easily pay probably a 35 to a 45p for that. If you got a company that's growing 15% a year on average, and they're in the drink space, you're going to easily pay a 35 to 45. So we're talking about a compound annual growth rate of 13% on the low end, 21% on the high end. Now, if maybe my numbers are a little low here, and let's say they grow at more of like a 20% number, you'll see how that changes how this company ends up being valued, right? So we run 20% numbers here. Look at this. Look at this. Now we're talking about 18% compound annual growth rate a year on the low end and about 26% on the high end, right? Keep in mind, that number might be low as well. They might be like more in a 25% range. But my kind of expectation is 15%-ish. And then, maybe they outstrip that on the net income line by, 18% or 20% or something like that. So the opportunity in regards to Celsius is pretty immense. The lower the stock goes, the better it is, right? My hope is there's going to be some major tax loss harvesting that comes into Celsius here in the fourth quarter, which I think there's going to be. And if there is, oh man, does that bode well? That's going to be so phenomenal for me as somebody that's buying the stock, right? And then we'll come back to Toll Brothers in just a moment here, but I just want to speak on Monster. Monster, this is more of a hedge play on Celsius, just in case I'm wrong about Celsius and something happens to their brand. I think Monster would be the biggest beneficiary of that. And so I'm, for every bit I'm buying Celsius, I'm buying Monster. But you can see I'm just buying Celsius heavier. Why? Well, Celsius has more upside potential than Monster. Monster's a little sleepy in terms of their upside potential. Monster is going to likely take some pricing over this next year, from my understanding, which is going to likely help their earnings per share immensely. So do keep that in mind. Now, in regards to my Toll Brother puts there. So this is a kind of a new hedge I've opened up here, right? I need to get more hedged. I need to hedge more here in regards to Toll Brothers. Absolutely, I need to hedge more. So my thought here is, let's say the market goes south next year. Let's say, I don't know, the economy goes south or something like that, right? Which I think there's a strong case to be made that the economy actually gets better in 25, but let's say that doesn't happen. Let's say it gets much worse. I don't even know how that could happen, considering real wages are likely going to be in a really good spot in 2025. But let's just say it happens. Okay, Toll Brothers are likely going to get hit heavy in that sort of situation, right? Because you could talk about the stock market gets hit heavy, which is not good for their customer base, because they're very reliant on real estate prices and certainly stock market prices. So if you had a situation where real estate prices got hit, stock market prices got hit, that would be very bad for Toll Brothers. And that would set them up for rough order numbers for 2025, which would mean rough numbers period in 2026, which would mean that they could have revenue downtrending in a massive way and net income downtrending in a massive way. Now, the tough thing with the Toll Brothers in kind of hedging against this one is, let me show you where the stock is valued. This is a tough thing with Toll Brothers, okay? Look at this. It trades cheap. 10 forward P. I mean, that's so cheap. 9.8 trailing 12-month P, so cheap. But here's the thing. If their business was to really go south, their earnings per share would fall off a cliff quick. That's what happens with these home builders. If all of a sudden real estate prices start going down, while simultaneously, let's say you start having some more commodity inflation in 2025 because the Fed's cutting rates, so commodities come back stronger, right? Meanwhile, the stock market's not doing so good, real estate's not doing so good, so the order numbers start being weak. You could get a panic sell in regards to Toll Brothers. That stock's near all-time highs right now. So you could easily get a panic sell in regards to Toll that would cause the stock to fall rapidly. And I mean, we're talking 30 to 50% drop in the stock in like a matter of a few months. We're not talking years. We're talking in a few months, right? Which then in that situation, my Toll Brothers put options would be looking very good. So it's a hedge, just in case the market goes south next year, just in case the economy goes south next year. There's money to be made in regards to Toll Brother puts, just in case, right? And I hope that doesn't happen. My hope is all my Toll Brother puts I buy, I hope they all expire worthless. And I say, why would I say that? Well, what am I going to have in Toll Brother puts? Let's say I hedge up and I get $20,000 or $30,000 worth of Toll Brother puts. And the market goes risk on, all my Toll Brother puts expire worthless. Toll Brothers is like $200+. People are feeling great about the economy, great about the market. Well, what do you think Meta's going to be priced in that market? $800, $900, $1,000? Where do you think Tesla's going to be priced at? $300? Where do you think PayPal's going to be priced? $120, $150? Where's Palantir priced in that market? So if you told me I had to buy $20,000 or $30,000 worth of Toll puts and they all expired worthless, I lost every penny on that. Thank you. I'll gladly take that. Now, on the flip side, if let's say I have $30,000 worth of Toll puts and the market does go south, well, next thing you know, those Toll puts could be worth $100,000 or maybe even a couple $100,000, right? Which would put me into a situation where, suddenly I have a lot more money to spend on stocks that are downtrended in a substantial way, right? So that's what we call a hedge in the market, and just in case things go south. Now, as far as mine, I bought them, in the money. And the reason I did that is I just didn't want to take too crazy of a risk. And bank that the stock's going down to 100 or something like that. Like if the stock goes down to 100, $10, $90, $80, something like that, I'm still going to make a fortune on these. Will they make as much as if I bought $100 strikes? Probably not, but I'll still make a fortune. And I don't take as much of a risk, just in case, let's say Toll only downtrends to 130 or 120, right? And if I got $100 strikes, well, shoot, I probably might lose everything on those. So that's kind of the way I also think about this, right? So yeah, in terms of some of those major moves, definitely need some more hedging. It might be Toll, it might go something else. I definitely need to add some more Celsius in this portfolio, some more Monster in this portfolio as well. And I would love to add some more Cake and some more Nike in this portfolio as well. Even those are kind of already bigger positions, I wouldn't mind at all taking that Cake position up to $100,000. And I wouldn't mind at all taking Nike up to $100,000. Those are the sorts of quality companies that I feel like deserve to be in that six-figure. Because right now I have a Mag 6, right? Meta, Tesla, PayPal, Palantir, Amazon, Elf. That's my Mag 6. I wouldn't mind having a Mag 8 and having Cake and Nike in there as well. Now, if Revolve gets running, then Revolve will join that bunch as well. So do keep that in mind, right? And so, Revolve's been there before. I wouldn't be surprised if they make it back in the future here. But that's where my chips are really lying. And that's kind of how I'm feeling about all this, guys. Okay, appreciate you joining me as always for this beast video. Hope you enjoyed my insights on regards to all these stocks, kind of how I'm feeling about them, updated thoughts. It's been a while since I shared updated thoughts on all those different stocks and all that good stuff, okay? Appreciate you guys joining me. Pin comment down there today. I'll put, if you're looking to apply, join my private stock group, my private wealth group, get access to 1000xstocks.com. It's all one bundle, so if you're looking for access to all that, click the pin comment down there, fill in an application. We'll see if we can get you access to that maybe next week at some point in time, right? Enjoying not only myself, but so many people that have scaled to 6 figures, 7 figures, 8 figures in their portfolios. It's a phenomenal group, plus all the education portion to go along with it and the software to go along with it as well. Much love and have a great day.